Good morning and welcome to our second Central Bankers panel of the day. If you read the press in the last few months, over the course of the last year, you'll hear a lot about radical changes to the roles of central bankers, lots of very extreme ideas: central bank digital currencies, green quantitative easing, helicopter money, filling the fiscal shortfalls, the problems for today. And if you listen to the rest of the conference, then clearly everything has been about the response to the COVID pandemic, about changes to the GDP, changes to the structures of economies and society. And it would be remiss, of course, to ignore those two key topics. But in the previous panel with central bankers that Chris Garnett just moderated, the Grant Sejko from the Central Bank of Albania said the main role of a central banker remains maintaining the value of money, both over time and internationally. And I think what I'd like to focus on, or like to start on in this panel, is exactly that. One of the key developments in this region last year, possibly one of the developments which hasn't got enough publicity so far, is that Bulgaria and Croatia have joined ERM II as a prelude to full Euro membership. So that's the topic that I'd like to start with. We have the panelists that you see in front of you. From Croatia and Bulgaria, we have direct representatives. We have Dr. Sandra Švaljek, I can apologize if I pronounced that wrong, Deputy Governor of the Croatian National Bank, with responsibility for central bank operations, communications, and audit, and presumably the practicalities of the adaptation to the euro. And from the Bulgarian National Bank, the Governor Dimitar Radev, who is, in addition to being governor of the National Bank, is on the General Council of the ECB and the European Systemic Risk Board, and represents Bulgaria at the IMF. To comment on these observations, and equally very welcome, we have representatives from two countries which haven't entered into the Euro journey yet. Mihály Patai, the Deputy Governor of the Magyar Nemzeti Bank, the Central Bank of Hungary, and Vojtěch Benda, a member of the Bank Board from the Czech National Bank. Thank you all very much for joining us today. Can I start, Sandra Švaljek, can I start by asking you about the decision of Croatia to join the ERM? It's a topic that, as long as I've been going to Croatia, has been on the agenda. Why now?
Thank you very much for the question, and I would like to say hello to the audience, which I don't see, but probably they see me. In order to answer that question, I should go a little bit back in time. So, as you know, Croatia has entered the European Union in the middle of 2013, and shortly after that, Croatia has entered into the excessive deficit procedure and exited from the EDP at the beginning of 2017. Almost immediately after that, we have launched the strategy of the adoption of euro. As I said, just a couple of months after exiting the excessive deficit procedure. We started with this strategy that early because Croatia was fully committed to early adoption of euro, being highly euroized economy. So it was a perception that the benefits of joining the eurozone are much higher than the possible costs. As said, the strategy has been adopted 3.5 years ago. We have exited the excessive deficit procedure. And actually, if you ask me why we have entered the ERM II in 2020, it was because actually it was the first possible date. So it's a relatively blunt answer. It was not because we have picked that date, but it was the first possible date to enter the ERM II.
A very good reason, and Governor Radev, I'm guessing a very different reason in Bulgaria, where clearly, I understand, the Lev has had quite a long, stable relationship to the euro. What prompts the decision to join now? How is the decision for you? You're on mute.
Sorry for that. I try to be disciplined. So joining the euro area has been a long-standing objective of Bulgaria, adopted years before we actually became member of the European Union, and embedded in the monetary regime of fixed exchange rate under currency board arrangements we introduced back in 1997. Joining the ERM II is a critical first step in achieving this goal. Against this background, the rationale for this step is clear. We expect it will help further accelerate the convergence process and improve the financing conditions. Of course, we're very well aware that this step needs to be supported by sound economic policies and further strengthening of our institutions. In practice, we expect this will be a mutually reinforcing relationship. The very process of preparation for the euro following the ERM II should motivate discipline and catalyze sound domestic policies. From the central bank perspective, we're very well positioned while taking this step. Our current monetary regime has operated successfully for almost a quarter of a century and had never been compromised during this period of time. Hence, the economy is already well adjusted to a fixed exchange rate. Our reserve currency is the euro, and so conversion to the euro is a logical process. Our analysis clearly indicate it will also be a smooth process with no losses in terms of our competitiveness or policy flexibility. Why now? Because all the necessary conditions were met, including an appropriate political framework, both internally and externally, and implementation of the relevant prior commitments. These prior commitments included actions in 6 policy areas, 2 under the mandate of the central bank and 4 under the mandate of the government. The actions undertaken by the central bank included, first, joining the banking union, or put it differently, establishing close cooperation between the European Central Bank and the Bulgarian National Bank under the single supervisory mechanism, on the basis of introducing a proper legal framework and conducting a comprehensive assessment of our banks, including asset quality review and stress test. And second, strengthening the macroprudential toolkit by legally empowering our central bank to adopt so-called borrower-based measures, such as imposing limits on the debt service burden of borrowers relative to their income. The government respectively undertook measures in the areas of supervision of the non-banking financial sector, the anti-money laundering framework, the insolvency framework, and governance of state-owned enterprises. So to keep the long story short, all the prior commitments were successfully completed by July 10th, 2020, when the Bulgarian lef was included in the ERM II.
Thank you. Before I ask Mr. Benda and Mr. Patai to comment on that, something that fascinates me, you both explained meeting the conditions for membership, and you've got there, congratulations. But what fascinates me now is the practical aspects. Between now and 2023, what needs to be put in place? What changes are necessary? What development, what practical considerations have you got over the next 2 years?
If I may answer, just as Mr. Radev has said, we also have fulfilled the commitments for joining the ERM II, but we also have commitments for joining the Eurozone. So Croatia has committed to undertake the reforms in 4 areas, that is to undertake 8 additional measures. But of course, we all know that we have to fulfill also the Maastricht, or to meet the Maastricht criteria, the criteria of nominal convergence. In addition to that, of course, as Croatian Central Bank, we have to undertake a lot of internal adjustment within our institution, and that is to adapt all the policy areas to the ECB policies and procedures. That is something that is not visible, but requires quite a lot of work. And there is one additional very complex task ahead of us, and that is to carry out the changeover of kuna to euro. And just recently, the day before Christmas, Croatian government has adopted the national changeover plan, which was previously in consultation with all the stakeholders, but also with a wide audience. And now we have to follow this national changeover plan that consists of many details and many steps to be carried out. I would like to stress one sensitive issue, and that is to meet the Maastricht criteria, especially the criteria concerning the fiscal deficit. Previously, in 2019 or 2018, we didn't see that as an obstacle to entering the Eurozone. However, with the pandemic crisis, but also with the two earthquakes that hit Croatia, meeting the fiscal target will be more challenging than it seemed before. However, we are still quite optimistic and hope that we will be able to join Eurozone by the beginning of 2023.
And I guess the same question from a Bulgarian perspective, what are the practical considerations? And perhaps I can expand it. Is there anything in there which is difficult, which is potentially going to delay the process or could be contentious with the populace?
Of course, the first thing that we need to do is to fulfill the nominal Maastricht convergence criteria. So far, we've been capable of meeting this criteria broadly over large periods. Similarly to Sandra, I just want to give you a flavor of the current status of fiscal criteria because they're under pressure as a result of the pandemic. The latest preliminary data point to fiscal deficit of around 3% of GDP for 2020, despite all pandemic-related spending last year, and government debt of around 25% of GDP, far below the 60% mark under the Maastricht ceiling. Of course, looking forward, we take into consideration the potential issues with regard to the implementation of the Maastricht criteria. For example, the possible inflation differential vis-a-vis the euro area, which comes along with the continuing real convergence of our economy. But in general, unless there are abrupt changes in our policies, which is very unlikely, or severe economic, financial, or market shocks, such as related to the pandemic, which from today's perspective is also unlikely, having in mind the recent progress with the vaccines, we should also be compliant in time for the euro adoption. Of course, in addition to the Maastricht criteria, Bulgaria needs to implement its post-ERM II commitments, agreed upon the Bulgarian left entry into the ERM II. These cover further tasks in the 4 areas included in the prior commitments package: non-banking supervision, insolvency framework, anti-money laundering framework, and state-owned enterprises. It is worth mentioning that following our inclusion in the banking union, we do not face any post-ERM II commitments related to the banking sector. On top of these clear-cut formal criteria and requirements, there is also a political dimension to the entire process. From the current perspective, however, I can see a fair amount of logistical administrative tasks, but no major non-technical factors originating neither from our euro area partners nor domestic that may potentially slow down euro adoption in Bulgaria.
Thank you. Mr. Benda, Mr. Patai, thank you very much for your patience, but I wanted to let your colleagues explore that topic. Can I ask you, as two countries that are, can I say, in a robust position, could potentially join the euro in terms of regulatory aspects, in terms of convergence criteria, but have never really had the popular support for joining, how you reflect on what you just heard on Bulgaria and Croatia's decision,
Yes.
how perhaps the epidemic has changed perceptions. Please, Mr. Patai.
Yes, so our route to joining the euro will be much slower, and the road will be a little bit longer. It doesn't mean that we are not practically in the eurozone, because the Hungarian economy is very much integrated into the eurozone countries. Think about only the automotive industry. We are producing all the engines for Audis, which are sold all over the world. So practically 76% of the Hungarian export and import is coming and going to the eurozone. We have a very strong popularity of the euro. It will be a surprise for you probably, but in 2019, April, and 2020, May, we had an official survey, and 66% of Hungarians are liking and supporting the euro. So another fact, the corporate loan stock, if I take all the corporate loan stock in Hungary, 60% is nominated in euro, because of the multinational companies are using the cash pool system, and they are financing their own companies. So practically in the real economy, we are part of the eurozone economy. As far as joining the euro, we have decided to take it slower, because we want to make sure that the real convergence will happen, and we are not satisfied with the real convergence yet. And we do not believe that joining the euro is a safe remedy for everything. Also, we would like to keep the room for maneuvering for the next couple of years, but no question, the target is to joining the euro. And as far as the Maastricht criteria, between 2012 and 19, Hungary has met all the Maastricht criteria, budget deficit, including the debt to GDP ratio as well. We decreased it to 62%. So we very much strongly try to comply with the criteria, but we would like to keep the room for maneuvering. Also, the date of joining is not clear yet, but it will happen.
And in Czechia, the similar conditions apply in terms of your strong relationship with euro economies. What are your thoughts, please, Mr. Benda?
Thank you, Richard. So I would add to what Mr. Patai said. Actually, I would not say the Czechs are negative to euro and the euro adoptions, but I think that the reason why they can come out usually negative in the polls is because they have no reason to change, because so far they experience relatively low volatility of the exchange rate, mostly appreciating in the long term against the euro. They were facing low interest rates. They were facing a relatively stable inflation. So the reason why they are not very enthusiastic, because they are not suffering with the current system. But we might say that the debt financial crisis changed the opinion of population towards the euro, because before it was assumed to be very elite club with the best performers of the economies and so on. It turned out it's not always true. And since then, I think the opinion has improved. But of course, still, it's not like very supportive for the euro adoption. Also because even the eurozation of the Czech economy is even much smaller than what Mr. Patai mentioned, because for example, FX-denominated loans to non-banking or corporate sector is less than 40%, and then mostly represents the natural hedging for the exporters, so that they would not cover their position that much by FX hedging. But I think we are in the Czech Central Bank. We have the opinion that we could easily live without, and even outside or even inside the euro area. And we, of course, have the example of Slovakia, which is very similar economy, and it's been living in the Eurozone for, I think, 12 years, and it's performing relatively well. But what is important game changer associated with the Bulgarian and Croatian case, which we've observed very cautiously and very carefully, is the request to join the banking union at the beginning of ERM II, which was not very mentioned very officially, and also, of course, before of course also the joining the saving mechanism. And there is the option, or there is the obligation to join the banking union without the rights for to be represented and voting in SSM governing bodies, and without any guarantees that the Czechs would really eventually join the euro after the expected 2-year ERM II period, which is not very comfortable for us, because we are not only the authority for a monetary policy, but also for banking supervision and financial stability issues. And we see this is clearly not only it doesn't have support in European law, on the current European law, of course, law can be changed, which is not bagatelle. And secondly, we see it clearly as a hardly acceptable democratic deficit in this point. So, the economic reasoning for this is also very problematic, because I don't see, and my colleagues don't see it either, why the position in a banking union, how does it relates to exchange rate stability, which is supposed to be the temporary period of ERM II, and how this should be associated with this period, and which would be more or less probation period if the country is able to perform relative stability of the exchange rate. So these are the technical issue, but I think they are very important, that needs to be solved before we decide, or the Czechs decide to join the ERM II and the Eurozone later on. But of course, Czech Central Bank is also only advisory authority. We don't make the decision, it's up to government. But I would say we are very traditionally every year, I think since 2007, publish the alignments or analysis of the alignments with the Eurozone, which consist of very thick and very comprehensive analysis, how the convergence moves on, and how really the Czech economy is not only in nominal terms, but also in real terms, it's more and more converging to the Eurozone, and the Eurozone is aligned with the Eurozone. If it's the answer to your question.
Mm.
It is, thank you. Sorry, Dimitar, Radev, I think you wanted to comment on that as well.
Yes, just a short comment. I understand and respect very much the position of our colleagues from Hungary and Czech Republic. One clarification, because this theme was discussed a lot in the pre-accession period. In fact, Bulgaria and Croatia have the full rights and responsibility of a full-fledged member of the banking union, including the voting rights. So very much engaged in the process, and we vote similarly to the way the countries from the euro area are voting. So participation in the banking union is something that is provided the respective country with the full rights and responsibility related to this membership. So I think it's an important clarification. Otherwise, I know the concerns, and they are more or less legal concerns with the very process. The process was changed. Banking union was not one of the conditions for the countries that joined the ERM II and the Eurozone in the earlier process. But everything happened before the establishment of the banking union. In fact, the banking union was established in 2012, and Bulgaria and Croatia are the 4 countries that are joining the ERM II after the establishment of the banking union. So if a certain very small experience so far of a few months, but I should say that we're very satisfied with our participation in the banking union so far. It helped a lot because it added capacity, added expertise to our supervisory activities, which is very helpful, and would provide us with very important information. Also, it was very beneficial in terms of further strengthening our supervisory activities internally. And we're talking, in fact, one integrated model. We're not talking for different models because 5 of the countries, 5 of the banks are under the direct supervision of the ECB. The remaining banks are under the direct supervision of the Bulgarian National Bank. But our experts, they participate in the joint teams, and it's an integrated model. And I find a lot of advantages of joining the banking union earlier because it provides the necessary experience because this is in fact the first institution of the euro area in which we became a full-fledged member. So it's quite an interesting and I think helpful experience. Thank you.
Thank you. And yes, can I ask about Croatia? Obviously, the banking system is very integrated there. A lot of foreign ownership of the banking system from Eurozone countries. Sandra, Švaljek, how do you think about this?
I would fully agree with Mr. Radev's intervention. That was our opinion too. Actually, it is not very easy to prepare for entering the close cooperation or banking union, and it required both the adjustment of the legal framework, the adjustment of our internal organization, and so it was really burdensome exercise for us. However, we are quite happy with it, and we are quite happy that we have accomplished to enter the close cooperation. And as Mr. Radev said, we are represented in a supervisory board, so we don't think that there is any democratic deficit related to the close cooperation. In addition, it is true what you said, that the banks participate in banking groups that operate on the level of European Union, and I think even for the banks, it's much more convenient to have one single supervisory policy and not to follow 2 different supervisory policies, one for Croatia and the second for the Eurozone.
Understood. I'd like to move, if I can, to a topic of the exchange rate for joining the euro. Mr. Patai mentioned about eventual Hungarian adoption of the euro. I'm not going to ask for prices, obviously, but your thoughts on that. Before I let you answer that question, though, a quick one to the audience. If you do have any questions about the topics that we are discussing today, please pop them into the chat room, and I will reflect them to the speakers. But Mr. Patai, yeah. Your thoughts, I'm not going to ask you for a number, but your thoughts on an appropriate exchange rate given the euroization of a lot of the Hungarian economy?
I don't take too seriously the exchange rate fixing. I know that this is a very simple and very good theory to fix the exchange rate, but the real life is really different. So I am not afraid of fixing the exchange rate. I give you an example why. In the European monetary system between 1979 and 1998, in 20 years, 62 times have changed the exchange rate fixing the participating countries, more than 3 times per year. Also, practically, yes, it's a beautiful idea, but the real life is overriding everything what is beautiful in theory. So practically, we can commit ourselves, but I know very well that exchange rate fixing is a very flexible idea in practice. So I take it as a very flexible idea, because another example, in the last crisis in 2008, 2010, there was fixed exchange rate in the Eurozone, but practically in some countries in the south, there were real devaluations within the economy as far as the civil servant salaries, pensions are concerned, and practically the very high unemployment was another expression of the exchange rate fixing. So if you keep the exchange rate fixed, then in Spain, unemployment goes to 25%, and for the youngest people with bachelor and higher degrees, the unemployment rate is more than 30%. So to come back, my main idea, exchange rate fixing is okay, we can do it, but the real life is always overriding it. Thank you.
Thank you. Mr. Benda, do you concur with that view?
Well, I agree with this view. We have, of course, we do our calculation what would be the potential or future development of the equilibrium exchange rate. So in any moment when the country decides to enter into the ERM II, we are able to provide the government with and the authorities with our guess. But of course, we take very seriously the market pricing, and we see many times when we already know what's the optimum or what's the equilibrium trajectory of the exchange rate, we are surprised sometimes by market pricing. And the same situation was, I think, in case of Slovakia. When they joined the ERM II, there was a very sophisticated estimate of the best setting of the central parity for the Slovak koruna against the euro. And despite it, we saw during the ERM II, I think 16% appreciation of the currency. And there were plenty of arguments against that it's going to very seriously harm the competitiveness of Slovak economy, and it's going to curb the price convergence of the Slovak economy and so on. Finally, it turned out that nothing really happened. So it's very difficult to say what's the optimum setting of the FX rate in terms of entry into the ERM II. But I view it the nominal and real convergence of the Czech economy, not only via the GDP indicators and so on, but also the price level indicators. And we can converge via price differentials. It means like higher inflation than the Eurozone, or we can converge at very relatively low paces of inflation, but with nominal strengthening of the currency. And that's the strategy we think it's the most appropriate for the Czech economy. So we view the nominal, the development long-term trend of the FX as a dynamic, and the trajectory estimated is roughly 2% in 2% appreciation in the next 5 years.
Thank you. It's been nice talking about something other than COVID for half an hour, but it's going to be remiss to not talk about the events of last year, which is what we spent most of last year thinking about. A very random question, if I can. If you compare what is going on now, if you compare the crisis that we're facing, how does that compare to the last one? And I think in particular, in terms of the policy responses, what you have to do from a monetary policy perspective to address what is going on now and how that differs from last time. Please.
Thank you. So if I take Hungary, in the Hungarian context, the situation is completely different. We arrived into 2008 crisis with a very low growth economy, high unemployment, and the macro balances were in red. The budget deficit was in red, the balance of payments was in red, and the banking system had no capital, no liquidity, and it was very weak. NPL ratio was very high. Also, we arrived into the previous crisis very weak. It was contrary to 2020. Before 2020, the Hungarian adrenaline level of the Hungarian economy was very high, 4-5% growth quarter to quarter, balance of payment positive, budget deficit positive, unemployment non-existent, so everything was fine. And then came the pandemic. So practically, the banking system is the same. It's in a much better shape we arrived into the pandemic than 12 years before. capital is strong in the banking system, liquidity ratio is strong, no MPL, everything is okay. Also practically, theoretically, we have a better chance to survive and to recuperate from this crisis. But the problem is that I am not more optimistic than was 12 years ago, because we don't know what will happen with some sectors. For example, hospitality industry, tourism. Can it recover? Can we have a normal forecast on these countries? We don't know what will happen with the healthcare system. It will be it has to be changed again. And I am quite pessimistic regarding this new work-life balance business, which is, I know it's not politically correct to talk about home office business because it's very popular, but there is a collateral potential damage because people, some part of the population will not come back to the normal office business because the motivation and the loyalty level will be lower after this 1 year pandemic holiday. So I don't know, despite the fact that in Hungary everything was better before pandemic, I am not sure that the recovery will be as beautiful as it has happened after the previous crisis. Thank you.
Thank you. There's a lot of topics there. Sandra, you want to comment on that?
Yes. My perception also is that the initial situation is quite different, and the nature of shocks is very different. In the first case, in the case of global financial crisis, we had economic shock. It was produced within the economy. And it was caused by macroeconomic imbalances, whereas in this COVID crisis, very obviously the shock stemmed from outside of the economy, and actually there were no macroeconomic imbalances prior to the crisis. As for the monetary policy response, in the latter case, monetary policy had to react swiftly, timely, but it could adopt all the possible measures in order to preserve favorable financing conditions, and it could be fully expansive, so to say, because the danger of entering higher economic imbalances was almost not existent. So in Croatian case, we have adopted a full set of measures. On one hand, we have provided a lot of FX liquidity in order to preserve stable exchange rate, but on the other hand, we have also provided a lot of kuna liquidity. So we have reduced reserve requirement rate. We have done the structural and regular repo operations. Also, for the first time, we have applied government bond purchases, and I'm very satisfied with the reaction of monetary policy, and also it was in line with the fiscal policy. And the sole problem is that it is not like in the first case, then when the imbalances will be fixed, everything will be over. Now we depend also on the health situation, on how the vaccination will evolve and how quickly the economy will recover. So in spite of all the measures that we have adopted, we still don't clearly see the light at the end of the tunnel.
Mr. Radev, Mr. Benda, do you have anything to add to that?
Well, yes, I fully agree. The situation is completely different, I would say, than in 2009, because that was mainly, in fact, imported demand shock and associated with following a very strong deleveraging of the banking sector that really postponed the recovery of the economies. In fact, we saw some glimpse of the recovery in the third quarter, when the lockdowns were unlocked, I would say, and the situation has improved and the economy reacted relatively strongly on export sides, on consumption and so on. Now we are facing second, third wave and some lockdown of the economy, but which is led by government. It's not imposed. It's imposed by government. It's not imposed by. It's not reaction of the market reaction. And of course, we are waiting for the decrease of numbers and progress with the vaccination. But as regards the really turn out what's very important, not only in the monetary policy, but also in the financial or macroprudential policy. You can hardly predict such events, such a black swans, but we need to keep the economy and the banking sector in good shape for any such events, and because they are unpredictable. So it turned out that the banking sector was well prepared. The NPLs are not increasing somehow markedly so far, and the central bank delivered a very strong decrease of interest rates, about at 200 basis points, which was equal to the decrease of interest rates by US Fed. And in addition, we decreased the countercyclical buffer in order to untie hands to the banks with the moratorium, with the postponing of the payback of the loans. And the situation so far looks we don't need additional monetary policy or unconventional monetary measure to be implemented. One of the reasons is also the fact that we have the local currency, which reacted in the expected direction. So weakening of the currency, depreciation, so increasing the buffer for the exporters and for the economy. On the other hand, of course, the negative externality is the higher inflation that we see in the Eurozone, but it's being gradually declining. So, so far, of course, we have some unconventional measures in debate, but not still decided to implement. But of course, since we still expect, we could say Nike-shaped recovery or even U-shaped recovery of the economy this year, hoping that the vaccination and everything will go well, then we will probably discuss in the end of the year, in the second half of the year, when we start to normalize our monetary policy. But of course, the situation is unpredictable, given the fact that nobody really can predict the behavior or the impact of the pandemic, as we are the only economists. So we are prepared to even react in the opposite direction if we see that the economy and the world economy is facing what we call the worst pandemic scenario. So postponed recovery and a more protracted period of recessions and deflationary or anti-inflationary pressures.
Thank you. We are running very short on time. There's a lot that I could ask you all about that question, but we've had a question from the audience, and because it's completely different from everything else we've been talking about, I really would like to ask it. And it's this. With the growing reliance on digital payments, how concerned are you about the risk of cyber attacks in your country? And what can you do to protect your payment systems? That's a completely different topic. Does anyone have any answers to that? Please.
Yes, no question that digitalization will be one direction where the monetary policy and the life will go. The other one is green. Of course, Madame Lagarde has spoken much more green business than last year than Greta Thunberg. And I believe that Christine Lagarde will speak about digitalization more than Zuckerberg in the next 2 or 3 years. So no question, but of course, if you want to have, and we want to have the fruits of digitalization, we have to deal with the cyber attacks as well. This is very important that the central banks are keeping an eye on it and do their best to hamper it. But no, this doesn't mean that digitalization is not the future.
Mm-hmm.
Totally agree that digitalization is clearly the future, but other panelists, thoughts on the bad guys out there and the risks they present to payment systems?
Definitely, it's a big topic. I'm I see we're pressed with just 10-15 seconds to finish, but yeah, of course, we consider this a major topic. We take all the preconditions with plan and create these respective structures in order to be sure that we react properly. In this sense, I could mention the very useful discussions within the ECB, but also within the Bank for International Settlement in Basel. This was a major topic in several discussions so far. If we're talking for the digitalization, of course, important aspect is about the recent developments and how this will impact on the cash. And I would also want to say that it's rather premature to call cash debt. Our statistics indicate that cash circulation keeps increasing. In parallel to the rise in electronic transfers, we have a joint venture with a French firm, our printing house, and the printing house is working 24/7. So the orders increase dramatically. So it's a big topic. The implications of this process on the monetary policy, of course, with interest rates near zero, the opportunity cost of keeping cash rather than holdings in banks, which may also be used for bank transfer, has diminished. Speculations may be provoked, therefore, that monetary policy may be among the factors for higher cash usage. On the other hand, there is a reverse causality. The switching between cash and digital payments has implications for monetary policy. For example, other things equal, more cash implies less room for using the interest rates as instruments of monetary policy transmission. So it's a big topic with a lot of dimensions, a lot of implications. But yeah, probably we should organize a separate discussion on this issue.
I totally agree. It is a big topic. We should organise that, but sadly we have run out of time. It's nice to end on a central banker talking about turning the printing presses on. That's always a good topic. Just a huge thank you to my panelists today for a very stimulating, wide-ranging conversation. Thank you very much for watching.